Major indices update. A warm welcome to all traders and investors. Glad to have you back on the EPK Capital YouTube channel. September 26th has been quite a journey for global markets, and there's much to explore. Let's kick off by reviewing how the major indices finished on Thursday. The S&P 500 faced a notable decline, dropping 0.50% to close at 6,604.72, marking its third day of losses. The Dow Jones Industrial Average experienced a fall too, sliding 0.38% or 174 points to end at 45,947.32. Meanwhile, the tech-focused Nasdaq Composite also fell by 0.50%, closing at 22,384.70. This three-day dip signifies the longest consecutive decline for major U.S. indices since March, with the S&P 500 and Nasdaq landing at one-week lows. What's concerning is that it's only the second time this year all three major indices fell together for 3 straight sessions. Shifting to global markets, the scene was mixed. European indices displayed some strength, with the German DAX actually rising by 0.54% to 23,662.74. In contrast, the FTSE 100 achieved a modest gain of 0.37% to 9,247.72. On the other hand, Asian markets struggled. Japan's Nikkei fell 0.87% to 45,354.99, and Hong Kong's Hang Seng dropped by 1.29%. The PCE inflation bombshell. The main story stirring the markets today is the looming release of the Personal Consumption Expenditures Price Index, the Federal Reserve's favored measure of inflation. This data is set to be unveiled at 8:30 a.m. Eastern and has traders feeling anxious. Economists predict PCE inflation will increase to 2.7% year-over-year for August, up from July's 2.6%. Core PCE, which excludes fluctuating food and energy prices, is expected to stay steady at 2.9% annually. These figures hold significance as they have remained firmly above the Fed's 2% goal for an astonishing 54 continuous months. This data release is particularly vital, especially as yesterday's stronger than anticipated economic indicators rattled markets. Second quarter GDP was adjusted upward to an annualized 3.8%, surpassing the unchanged expectation from the previous 3.3%. Additionally, initial jobless claims dropped to just 218,000, keeping unemployment close to the low end of the 2025 range. This solid economic data has changed the Fed's outlook quite dramatically. The chances of a half-point rate cut by December plummeted to just 60.5%, causing traders to rethink aggressive easing strategies from the Fed. Trump's tariff thunder. On another note, President Donald Trump created a stir in the market yesterday with the announcement of sweeping new tariffs set to begin on October 1st. The most striking one is a shocking 100% tariff on all branded or patented pharmaceutical imports, effectively doubling the prices of many imported medications. But that's not the whole story. Trump also introduced 25% tariffs on heavy-duty trucks, 50% tariffs on kitchen cabinets and bathroom vanities, and 30% tariffs on upholstered furniture. The pharmaceutical tariff alone could have serious repercussions for British companies that export over £5 billion worth of pharmaceutical goods to the US each year. The president emphasized that these tariffs could be avoided if companies are actively breaking ground or have facilities under construction in the United States. This announcement prompted substantial action, with Eli Lilly revealing plans for a $6.5 billion manufacturing site in Houston just this week, adding to their previously announced $5 billion Virginia facility. As a result, Asian and European pharmaceutical stocks were hit hard. The Hang Seng Biotech Index fell 2.58%, while major European pharmaceutical companies like Novo Nordisk, Roche, Novartis, and AstraZeneca saw declines ranging from 1.8% to 2% in early trading. Political earthquake at the UN. This week, the United Nations General Assembly witnessed a flurry of political drama. President Trump delivered a trademark blunt 55-minute speech that had world leaders laughing awkwardly and squirming in their seats. Trump's message was unequivocal. He claimed to have ended 7 wars and threatened further tariffs against European allies who continue purchasing energy from Russia. He particularly focused on NATO members, calling them hypocritical for funding the war against themselves by purchasing Russian oil while opposing Russia. His firm ultimatum was clear: they must immediately stop purchasing energy from Russia. The president also dismissed climate change priorities at the UN, labeling them a con job, and rejected efforts for Palestinian statehood as a reward for Hamas. His broader statement painted the UN as ineffective, ridiculing its dependence on strongly worded letters and costly renovation projects. In contrast, Chinese President Xi Jinping made a major climate announcement through a video link, promising for the first time that China would not only stop increasing emissions but also cut them by 7–10% by 2035. This sets the world's two superpowers on entirely different energy trajectories. Ukrainian President Volodymyr Zelensky issued urgent warnings regarding Russia's increasing technological prowess, particularly in AI and drone warfare. "We are currently experiencing the most destructive arms race in human history," he declared, insisting that stopping Putin now is cheaper than trying to protect every port and every ship from terrorists using sea drones. Cryptocurrency carnage. The cryptocurrency markets are facing their own tempestuous storm. Bitcoin has slipped below $110,000 for the first time in 6 weeks, hovering around $109,100 after a harsh 3.8% decline on Thursday and a total fall of over 6.5% this week. This sell-off gains additional intensity due to a staggering $22 billion in cryptocurrency options expiring today, with more than $17 billion in Bitcoin options alone. Derivatives exchange Deribit notes that a considerable amount of open interest is in bullish contracts, meaning this expiration could usher in further volatility if support levels break down. The downturn doesn't stop at Bitcoin. The total cryptocurrency market cap has tumbled by $150 billion within 24 hours, now resting at $3.70 trillion, with nearly $1 billion in liquidations recorded. Ethereum has dipped below the psychological threshold of $4,000, currently trading around $3,942. Institutional sentiment seems to be waning as well. Bitcoin ETFs experienced $253.4 million in outflows, while Ethereum ETFs saw $251.2 million exit the market, reflecting increasing caution among institutional investors. Meanwhile, altcoins are suffering heavy losses, with Story, IP, plummeting 28%, and major tokens like Avalanche, Solana, XRP, and BNB all dropping between 4% and 15%. The crypto fear and AMP greed index has firmly entered fear territory as traders pull back on risk exposure. Corporate earnings and economic data. On the corporate scene, it's been a quieter day regarding major earnings, with the spotlight mostly on the upcoming PCE data release. However, there were some remarkable movements among individual stocks. Intel surged 8.9% following reports of discussions with Apple about a possible investment, while Oracle dropped 5.6%, and Tesla fell 4.4% amid rising AI sector concerns. Among major stocks, CarMax faced the most significant drop, plunging 20% after disappointing quarterly results. The University of Michigan consumer sentiment data is also slated for release at 10 a.m. Eastern, with forecasts pointing towards a decline to 55.4 from the previous 58.2. Furthermore, consumer expectations are anticipated to drop to 51.8 from 55.9, indicating growing economic uncertainty. Market volatility and technical analysis. The VIX, often referred to as the Fear Index, surged 3.5% to 16.74, reflecting rising anxiety in the market ahead of today's inflation data. Options markets anticipate an S&P 500 movement of plus or minus 35 points, or around 0.53%, considering the current level of 6,605. Treasury yields skyrocketed across the board, with the 10-year yield hitting a 3-week peak of 4.17%, an increase of 2 basis points. The 2-year yield climbed to 3.66% as bond markets adjusted for reduced odds of significant Fed easing. In the currency markets, the dollar experienced a robust strengthening overall, marking its largest 2-day gain in 2 months against nearly every major global currency. In commodities, copper prices retreated following Wednesday's rise, while oil steadied, and precious metals, excluding gold, saw increases, with silver, platinum, and palladium rising 3–4%. Looking ahead, key catalysts. As we approach the key moments before the PCE release, markets linger on a knife's edge. If the inflation data surprises to the upside, we might see even more strength in the dollar and additional pressure on tech shares and interest-sensitive equities. Conversely, a softer figure could enable markets to lean towards more dovish Fed expectations. The crypto markets stand at a pivotal moment today with a major options expiry that might set the course for the concluding quarter of 2025. For Bitcoin, reclaiming the $113,000–$115,000 range is crucial to restoring short-term sentiment into bullish territory. From a technical standpoint, the recent break beneath key support levels has analysts questioning whether this signals the conclusion of the incredible rally that initiated after April's tariff-induced declines. With valuations stretched and economic indicators mixed, there's limited leeway for errors in the current market pricing. Global economic implications. The broader consequences of yesterday's events extend well beyond daily market fluctuations. Trump's pharmaceutical tariffs could fundamentally alter global drug supply chains, potentially leading to increased healthcare costs for American consumers while compelling European and Asian firms to shift production. The Fed's inflation dilemma continues to intensify, with core PCE inflation possibly accelerating to levels not seen in months. This places the central bank in a challenging position, balancing employment worries against ongoing price pressures in an unexpectedly resilient economy. Concurrently, the crypto sell-off underscores a broader risk-off sentiment as investors grapple with policy uncertainties, geopolitical strains, and the possibility of central banks being overly dovish. Conclusion and market outlook. September 26, 2025, may well be remembered as a momentous day when numerous forces intertwined: inflation concerns, trade policy uncertainties, geopolitical tensions, and cryptocurrency market dynamics converged, creating notable market turmoil. The forthcoming hours are vital, with the PCE data poised to either affirm market worries about persistent inflation or provide solace that stabilizes both traditional and digital asset markets. With the Federal Reserve's credibility on the line and global trade relations strained by new tariffs, investors confront a complex landscape that demands careful navigation. For crypto investors, today's options expiry might signal either a capitulation low or the beginning of a more profound correction, while traditional market participants await clarity on whether this three-day downturn signifies healthy consolidation or a deeper concern. As always, in such volatile markets, effective risk management is indispensable. Regardless of whether you're trading stocks, bonds, or crypto, size of your positions and diversification remain your greatest shield against unexpected market shifts. Disclaimer: this content serves educational and informational purposes only and should not be construed as financial advice. Always seek guidance from a qualified financial advisor prior to making investment choices. Trading and investing come with inherent risks, and past performance is not indicative of future results. That wraps up today's market summary. Don't forget to subscribe for daily market insights and hit that notification bell so you never miss our coverage of unfolding financial news. Until next time, trade carefully and stay informed.